So now we have not one, not two, but in the last several months, the three largest bank insolvencies in the history of the country. Mm-hmm. Right?
Yep.
And this one was First Republic, which is the largest, right? And obviously, guess who's bailing it out?
You and I, Robert. Who else?
Well, only in part. So the two bailers, or can you say bailies? Is it bailies or bailers?
Bailies?
I don't know. Those guys, guys that are bailing it out. It is a combination of the Federal Deposit Insurance Corp.
Yep.
And our friend Jamie Dimon at JP Morgan Chase. By the way, in the last bankruptcy of this size and stature I think it was Western Republic in 2008. And guess who bought up those assets? Was
it JP Morgan?
It was JP Morgan Chase. What do you think of them apples? Yeah, so they're giving JP Morgan Chase the $50 million financing. 50, did I say million?
Yes.
I'm 3 zeros short. It's 50 billion. Sorry, folks. You know, what's a few billion or million between friends here? Exactly.
You know.
And they are tapping, no pun intended, the FDIC insurance fund. I'm an insurance guy, right? In my real life, in my prior life, I don't know, real life, prior life, for $19 billion. So here you have these mega banks too big to fail. And that's my question, right? They're absorbing everything. Interest rates are going up. Money is being pulled out of the economy now because they don't want to lend. And we'll talk about that in a second. Mm-hmm. So are we now in a place where they're too big to fail because everyone's going to be short on money?
Well, this is when we say too big to fail,
right?
What does that even mean anymore? And if we think that there's a problem with all these banks being too big to fail, then why aren't the monopoly powers being pulled out from Congress right now? Why are we allowing mergers this massive, already one of the largest banks in the country, to get even bigger?
Oh no, this makes them the largest.
Okay, so basically,
they are the largest.
So thanks to Big Daddy government, we're creating too big to fail, and then extorting money, literally extortion. I'm calling it extortion. If you're saying it's too big to fail, then you're extorting money from the American people to give to bankers.
Right. Look, to me, a couple of things. By the way, the too big to fail banks are the ones that mostly on the West Coast. The Signature Bank, I think, was on the East Coast. I forget which one, but two in San Francisco, one here. They were giving out jumbo loans at preferred rates to large lenders, knowing that the government was going to pick winners and losers if they became insolvent. And again, I don't think you've seen the last of this, but here's my question, and I don't understand, because there's an inconsistency. It's incongruous to me. So here we have, and we talked about it in our last show, the Biden administration is now, as of this month, the Biden administration has started tiering the mortgage rates where the people with higher FICO scores or credit scores are going to subsidize people with lower credit scores. And if you have a lower credit score, it means that you are more of a credit risk to defaulting on your loan. So we're taking from the rich, we're giving to the poor. We are subsidizing people who may or may not. And look, I think everyone should have a home if they can afford it. But at the end of the day, credit risk is credit risk. So we are basically going to be bolstering bad risk at a time when banks are failing for making bad loans.
Exactly. It's 2008 all over again.
What am I missing?
It's 2008 all over again.